Good morning, guys, and welcome back. My name is Sourabh Mutha, and we're looking at the recent tax paper. CA Inter student given your exams. Exams got over in September. Best time to analyze it is after a few days when you're relaxed and you can evaluate how well you did. Also, for people who are giving the Jan exam, Jan 26 exam, this could be a nice thing to revise to see how ICA asks the questions in the exam. So, in the next 20, 25, 30 minutes, we will evaluate the entire paper, both DT and GST, including MCQs, to see what ICA has asked and what ICI could ask in the next probable papers. So watch, keep on watching. In the end, I will give you the Google Drive link where all these papers and more are stored. So here we go. Without wasting any time, chaliye tax karte hain. Let's start. This is what we are looking at. So this is the paper, and I'm going to do the paper exactly like a student. So if I was going in the exam hall and I was doing it, how would I do it? I would not look at the first question, number one, that is 15 marks compulsory question, because that is all over the place. So I'm going to skip that. And here also in the discussion, I'm going to skip it and do it right in the end, just like how we would do it in the exam. The second question is what are my eyes are on? Guys, there's a person called Shweta who's an Indian citizen, but there's a lot of marks, 6 marks, and a lot of context to read. So I would straight away go to the last line. Guys, all the juice is in the last line. Go to the last line directly. Ascertain her residential status. Basically, I want to talk about section 6.1, briefly explaining relevant provisions along with the taxability of income. So find out the total income also, that is section 5, for the assessment year 25-26, that is previous year 24-25, in the following independent cases. You know the drill, guys. There are three kinds of people there can be. One is called NR, one is called RNOR, and one is called ROR. If she's an ROR, every income will be taxed. If she's an RNOR, then only India-based income will be taxed. That is their income deemed, earned, accrued, received in India, plus income which is earned abroad but controlled, managed, and set up from India. And for an NR, only four incomes, that is their incomes, that is deemed, earned, accruing, and received in India will be taxed. So for these two, we have to see the India connection. This one will be taxed on all incomes. Let's say who she is. She did not visit India during the year financial year 24-25 at all. Now let's take the first situation and let's analyze. If she did not visit in India at all, the first condition of 182 days is not fulfilled. If it's not fulfilled, let's go to the second condition, which is in this year 60 days and in the last 4 years 365 days. That condition will not apply to her because she's an Indian citizen who's visiting India. Remember, guys, there's a shortcut called EV. Any Indian citizen leaving India for employment abroad during the year, or any Indian citizen or PIO who is visiting India. So she is a second case, and hence the second condition will not apply. As for the first condition, she is a non-resident. But recently, we have seen the question that a non-resident can become a deemed resident, that is R and OR, if they fulfill two, three conditions. What are those conditions? Let's see if she fulfills them. The first condition is she should be, it is applicable only to Indian citizen, this deemed resident part. Is she an Indian citizen? Yes. The second is her Indian income should be more than 15 lakhs. Let's see her Indian income. Is it actually more than 15 lakh? And when you see this Indian income, we have to look at DEAR plus one income. Remuneration from a CA firm in India, amount received in India is 16 lakhs. So is this an Indian income? Yes, I'm not even reading ahead because she is earning more than 15 lakhs. And last condition is she should not be taxed in any country as a resident. Let's see. So she's a chartered accountant. She's working as a partner in Shweta and Varun Associates, which was set up in Chennai. She visits foreign country A quite often. We don't know which country it's. Provides accounting services to corporates there in her individual capacity. She's doing well. In country A, she's not subject to any income tax. As this is the deal. Because she's not taxed in any country as a resident, this is the condition. And because she's meeting all the three conditions, she will become a RNOR resident, but not ordinary resident. So that's the first answer. The first answer is she is a RNOR. And now over to her income, guys. We have to look at DEAR plus one income. 16 lakh, is it an income? Yes, 16 lakh, it's an income first. Income received from providing accountancy services in country A, 5 lakhs, guys. There is no connection with India. We cannot tax this income. Dividend from country and received in a bank account country, again, we cannot tax. There is no connection with India. Income from a business in country which was set up in country but is controlled from Chennai, controlled, managed, or set up from India. This will be taxable plus 7 lakh. So her income that is taxable is 23 lakhs. So this is RNOR plus 23 lakhs. This is the answer to the first one, 2 marks in your pocket. Let's see the second one. She visits and stays in India for 200 days every year since the last 12 preceding previous years, including this year. Now let's see again the same conditions. Is the 182 condition being fulfilled? Yes. As the first condition is being fulfilled, so she becomes a resident. Now, what kind of resident? Is she a RNOR or is she a ROR? That depends on two additional conditions. Flashback mode, if you remember. In the last 7 years, has she stayed in India for at least 730 days? Let's check that. If she stays in India for 200 days every year, so 200 into 7 is basically 1400 days. Is she fulfilling this condition? Yes. And the last 10 years, is she a resident in at least 2 years? Yes, because she's staying in India for 200 days, she's meeting the first condition always, and hence this one also is met, and she becomes a ROR. Now with the ROR, they cry in the corner because everything is taxable. So all the incomes will be taxable. 16 lakh, yes. 5 lakh, yes. So 16 plus 5, 21 lakh plus dividend 8 lakh, yes. And plus the in business control from Chennai, that is 7 lakh, that also will be taxable. So income will be 36 lakh in this case. So 2 marks again in your pocket. I'll tell you how to present it also. Next, she did not visit India during the previous year at all, and her income from profession in India is just 4 lakh. Will your answer change? So if she does not visit India at all, guys, again, this first condition is not met. She becomes a NR. And now to convert NR to RNOR, is it possible her Indian income 16 lakh has become 4 lakh? Let's check. So if I cancel this 16 lakh, make it 4 lakh. So we'll start with 4 lakh income. It has to be more than 15 lakh. 5 lakh will not be taxed in India, no India connection. 8 lakh also. 7 lakh will be taxed in India. So 7 plus 4 is 11 lakh. And with that, she is not meeting the condition of income more than 15 lakh in India. And hence, she will continue to be a non resident. As a non-resident, she will be only taxed on income which are earned, received, deemed, etc. in India. So is this earned, received in India? Yes, 4 lakh. This is no connection to India. This is no connection to India. This is dear plus one, but we are talking about non-resident. Non-resident is only taxed on dear income, not the plus one. So her Indian income then will only be 4 lakh rupees. So the last answer is NR, and this is 4 lakh. So there are three answers you got. Now let's present. How do you present it? First, you put the facts. FLC is the way you present. So first you put the facts. The facts are she's Shweta, she's a chartered accountant, has a firm in India, and she's also providing services abroad. That's the facts of the case, and she's not being taxed in that country. Facts. Next, law. As per section 6.1, she will have to fulfill any of the following conditions to become a resident in India, 182 days. And that's how we discuss the first one, then the second one, and then the third one, and these should be the answers. So there'll be three paragraphs for each of them where you'll talk about the conditions she fulfills or she does not fulfill, and then you will talk comment about the total income as well. So guys, this is your 6 marks. I don't think this is very difficult. On a scale of 10, I think this is medium. So 5 on 10, the difficulty level. Let's go to the next mark, guys. Aryan Khan, no, Aryan only, is going to get us 4 marks if we are able to answer this question well. Let's see what this question is. Looks like it's a tedious question. I always jump to the last line because the juices are in the last line. Discuss the TDS and TCS implication in respect of the above mentioned transactions, assuming PAN of the concerned parties are available. PAN is available, that means the higher rate will not apply. That's the case. Now, guys, in TDS, you have to always put the pair in the middle, and the moment you make that diagram, things will fall into place. So I'm going to put the pair here, that is Aryan Khan, and we'll see how this works. Aryan is a resident individual engaged in the retail trade of auto spare parts through various stores across Delhi NCR. He has a total turnover of 15 crores during the financial year 23-24. That means last year his turnover was more than 10 crores. They are hinting us towards a section called 194Q, Q for quantity. The following data is furnished during the financial year 24-25, that is this year. He purchased goods. If you purchase goods, are you the payer? Yes. So I'm putting Aryan in the middle. Aryan is the payer. He purchased goods worth 1 crore 5 lakh, excluding GST at 18% on 21st May 2024 from Diva LLP. So this is Diva LLP. So Aryan is supposed to pay them some 1 crore 5 lakh. I'm just writing 1.05 crores. That is the purchase. Is it more than 50 lakhs? Yes. And here is the government expecting some TDS. Let's talk about the section, guys, now. The section is section 194Q, quantity. There are two conditions to be fulfilled. The person who's in the middle, Aryan, his turnover last year should be more than 10 crores. Is that fulfilled? Yes. And he has to purchase from a particular person in India more than 50 lakh of goods. Is that also being fulfilled? Yes. Then there will be TDS at the rate of 0.1%, but only on the excess above 50 lakh. That is, if you take 1 crore 5 lakh minus 50 lakh, it is basically 1 crore 5 lakh minus 50 lakh, that is 55 lakhs into 0.1%. This looks like the answer, that is 5,500. Let's continue reading. Out of these purchases, goods worth 5 lakh excluding GST were returned in the same month. No, in the next few months, guys. This is the month of May, this is the month of July due to quality issues. So guys, in the month of May, will you have to pay it on the entire amount? Yes, because it is payment of credit, whichever is earlier. So in this case, you will have to, in the month of May, or that is in the month of June, you'll have to pay to 5,500. And whenever there is a return of goods, you can always take a credit of that TDS paid extra. No problem with that. Assume the turnover of Diva Limited during the year was 8 crores. Now, why have we given the turnover of Diva Limited? Because if you know there is a section, this section does not apply to May 2026 onwards, but it applies to Jan exams, also applicable to September exams. There is a section called 2061H, high value, where if you're selling goods worth more than 50 lakh rupees, then in that case, because your turnover is not more than 10 crores, this section of TCS will not apply. So in the exam, you'll have to again give the facts. Then you have to give the law section 194. You have to comment. You have to give the TDS amount. You have to talk about that in the month of July when the goods are returned, that amount of TDS you can always take credit because the government doesn't need your extra money. And last, you have to comment that since her turnover, Diva LLP's turnover is not more than 10 crores, the TCS section 206C1H will not be applicable. In case both are applicable, then which one will be applicable, sir? In that case, 194Q will be applicable because that is on payment of credit, whichever is earlier, and this one is only on receipt basis. So that one will be applicable in case both apply. Next, Aryan paid. So again, Aryan is in the middle. Who is Aryan paying this time? Because he's the payer. Every month to Mr. Kulveer. So there is a person called Kulveer, a resident individual, for providing catering services in his shop under a contract. So if you're paying some catering services, the section is section. The government, of course, is here. I'll draw the diagram. The section is section 194C, C for contract. If you are paying to someone more than 30,000 per payment or more than 1 lakh in the year, any of them. In this case, we are paying more than 30,000 every month. So 77,000 on that TDS will apply at the rate of 1% because the person you're paying to Kulveer is an individual. If Kulveer was a private limited company or a partnership firm, then we would deduct 2%. So that is 77,000 every month. So we can do monthly TDS also into 1%, that is 770 rupees. The government has to get TDS whenever it's paid or credited, whichever is earlier. Guys, Aryan just got you 4 marks. Just saw a series on Aryan also made by Aryan Khan, but Pads of Bollywood, of course, censoring the word, which was really nice. If you finish your exams, ideal time to go and watch it. Anyways, we now go to the next one. Guys, this is question number 3. Ideally, I would move ahead just like this. So between 2, 3, 4, I have to do any two. So I'm going to do the next one. That is question number 3A. Let's see what there is. In this second question, again, there's a paragraph. So I'm going to look at the last line. Advise money about which option of computation of capital gains is most suitable for him as far as his tax liability is concerned. So the chapter is capital gain, and that's how I have to look at it. As you know, guys, capital gain now has Swiggy and Zomato 2 options. Let's look at the first option, which is plain and simple. Guys, in capital gain, first there is an asset you are selling, so there will be sale consideration. Next, there will be some expense on transfer, you will minus that. Then there will be net sale consideration. Then there will be cost of acquisition you can minus, that cost of improvement you can minus, and the final number will be here. Just 1 second. So let's talk and let's fill in these gaps, and whatever is the gain, if it's a long-term capital gain, then it will be taxable at the rate of 12.5% is something that we already know. So let's move ahead and let's see what there is in this question. Mr. Money, a resident individual aged about 45 years, acquired a plot of land in March 2002, long back, for 12 lakh 25,000 and paid stamp duty of 1 lakh on the registry of land. So his total cost was 12 lakh 25 plus 1 lakh because cost means total cost. So 13 lakh 25 as his cost. He sold this land on the 10th of October 2024. So definitely long-term asset. So this is definitely a long-term asset. We move ahead. Now in this case, he's selling it for 80 lakh. The stamp duty value due to valuation assessed with the sub registrar was 83.50 lakh. You know, guys, you take the sale value or the stamp duty value, whichever is higher, of course, giving a 10% margin. So 80 lakh plus 10% is 88 lakh, which basically is fitting within the stamp duty value. So my sale consideration will be 80 lakh. That's the first part. Next, advise money, there is no expense on transfer. They've given you CI, but there is no indexation now available. So I'll minus 0. So my net sale consideration is also 80 lakh. Next, my cost of acquisition is 13 lakh 25,000, which I will minus. There is no cost of improvement. So 80 lakh minus 13 lakh 25,000 is basically 66 lakh 75,000. On this, you'll have to pay tax into 12.5%. That is, you'll have to pay tax of 8 lakh 34,375. This is the amount. Of course, he has no other income chargeable to tax, has opted out of the provision of section 115 BSE. So basically, he's in the other income. And even if you reduce the basic exemption limit, etc., still you will be taxed at a 12.5% interest rate, tax rate. So this is 8,34,375. This is option number one. Now let's slide to option number two. What is there in option number two? Is option number two is also something similar. Let's see what is option number two here. Option number two says you can take indexation, but tax to lagega at 12.5%, nahi 20%. So let's see. Sale consideration still remains 80 lakh. Your expenses are nothing. Net sale consideration is also 80 lakh, but this 13 lakh 25,000 will now be indexed. So 13 lakh 25,000 divided by March, that is 0102 divided by 100 into you're selling it in the year 24-25, which is into 363. So the amount, the cost is 48 lakh 9,750. If I'm going to minus this from 80 lakh, I get a number of 31 lakh 90,250. This is my long-term capital gain after indexation. This is my other option. And into 20% is what I'll have to pay. So I'll have to pay 6 lakh 38,050. So between the two, the option number two is more favorable for me. I call this option I-20 because you can take indexation and then 20%. That's my shortcut. What I teach in my classes. All right. Now advise him. You'll have to give both the calculation and then advise him that he has to opt for option number two. Any other thing? Yes. The conditions for opting of these two is that you have to be an individual or HUF. Are you individual HUF? Yes. And you have to be selling any asset which is land and building. Is he selling a land and building? Yes. So then you can choose option number two and save him money and get yourself 6 marks. That's the next question. Over to us, Prabhu. Literally, guys, let's see how Prabhu can help us here. Get another 4 marks. Let's go. So Prabhu here has a job and he's getting some things. He's a resident individual. So only 1, 2, 3, 4 points. Compute taxable salary, guys. The moment I see salary in my mind is SAP and SEP. First, we will do SAP. That is any salary you get, any allowances you get, any perquisites you will get, you will add, you will minus whatever, and then you will minus the deduction SEP. And he has opted out of the default tax regime. That means the old regime. That means he will get salary reduction only 50,000. Let's start. A rent-free unfurnished accommodation owned by the company in Mumbai on the 1st of May 2024. However, he occupied the accommodation only from 1st December 2024. Basically, the perquisite of house is given only for December, Jan, Feb, March, and April. No, December, Jan, Feb, March. Only 4 months. So this accommodation we will calculate only for 4 months. Just saying the accommodation is owned by the employer. And if it's owned as a percentage, in Mumbai, the percentage will be 10% of his salary. But I can't do this right now because the salary definition is very big and this should be done last. So I'm just keeping this blank here, this number. All right. Next. The company had bought this house in the financial year 23-24 at a cost of 2 crores. So the house is owned by the employer. We'll come again for this. This is pending. A mobile phone for his personal use on 1st April 2024. Guys, you are using an asset given by the employer, paid by the employer, used by the slave. This should be a perquisite. But there are three things called LMJ, laptop, mobile, and journals, which are not considered as a perquisite. So this mobile phone which you are using will not be considered. I'm just writing a 0 here for mobile phone perquisite. The company also gives them a telephone allowance. As you know, guys, allowance is like pocket money. It is first added 1,000 per month into 12. So 12,000 will first be added. But it's a daily expense. So if you can minus the mobile phone bill of 15,000, so 12,000 minus 12,000, it is zero. I'm assuming telephone allowance is a daily allowance. What is daily allowance? Something that is spent in the day-to-day affairs of the work. So I'm assuming that and hence nothing will be taxable here also. So this one is done. This perquisite is zero. Next, the company had purchased a car on the 1st of July 2022 for rupees 10 lakh. Company purchased, the master employer purchased the car for 10 lakh. This car is sold to Prabhu on the 1st of August 2024 for 2,50,000. As you know, if an asset is purchased or sold by the employer and you get a benefit, that benefit is taxable. Let's see how you calculate the benefit. Basically, you start and you get the WDV. I'm starting with 10 lakh rupees is the value of the car. And we have to see how many completed years. 1st July 2022 to 2023 is 1 year complete. Yes. 2023 to 2024 is 2nd year complete. Yes. And 1 month we have to ignore. So 2 months, 2 years depreciation we have to take. Depreciation of year one. As you know, guys, there are 3 rates of depreciation which are different here. For electronic items, it is 50% SLM. For motor vehicles, it is 20% SLM. And for all other assets, sorry, WDV. And for all of the assets, it's 10% SLM. This is 20%. So 10 lakh into 20%, even that I'm doing on the calculator. Shame on me. So this is 2 lakh, I will minus. So that gives me an amount of 8 lakh. And 8 lakh into 20% again is 1.6 lakh, I will minus. And I will get 6.4 lakhs. So the car is worth 6,40,000, but you are getting it only for 2,50,000. So are you benefiting? Yes. So 6,40,000 minus 2,50,000. So your perquisite value is 3,90,000. I'm writing this as a perquisite because while calculating, guys, perquisites are not included in the definition of salary for accommodation. All right, this is the third one. Now let's go to the fourth one. He was allowed to use a video camera and laptop belonging to the company from 1st April 2024. His laptop of the company being used, there is again no perquisite, so I'll be writing dash. But video camera paid by the company used by you, 10% of the original cost you'll have to add. The company had purchased these assets for 50,000 and 2 lakh. 2 lakh I will ignore because that's laptop. Video camera is 50,000, so 50,000 into 10%, that is 5,000, and used it for the whole year, so 5,000 is another perquisite. I'm putting P also here. Compute the taxable salary has opted out cost inflation index. I'll tell you why CI is given, but later on. Next, guys, what is his salary? His salary is 80,000 per month. So 80,000 into 12, his salary is 9,60,000. I'm putting that salary amount 9,60,000. Now, guys, the only thing stopping us is the definition or the amount of accommodation is 10% of salary. Now, salary is SAP. You have to take all the amounts of salary. Here we have only 9,60,000. We have to take all the allowances which are taxable, which is zero, and we don't have to take perquisites, again zero. So my definition of salary is 9,60,000. On that, 10% is 96,000. 9,60,000 into 10% is 96,000. This is the value of perquisite for the whole year, but you have used the house only for 4 months, so divide by 12 into 4, which is basically 32,000. So this is my total. Let's total it up. 9,60,000 plus 32,000 plus 3,90,000 plus 5,000. So amount is 13,87,000. There are three deduction called SEP. Standard deduction, yes, there is a 50,000 standard deduction. Entertainment allowance deduction we will not get because given only to government employees and those who get entertainment allowance. That is not the case here. And there is no professional tax. So 13,87 minus 50,000 is 13,37,000. This is your sweet answer to get 4 marks from Lord Prabhu. We move ahead to question number 4. Let's see how we can do that. Let's move ahead to Surbhi, who's going to help us get 6 marks here from a chapter which is called Set Off and Carry Forward. How do I know about it? The moment I read the word loss, I knew somewhere set off. And I was expecting set off. We discussed it in class also. Okay, set off, we'll get one some. Residential status, we'll get one some. These were some very probable questions in the exam. So it'll be a resident individual. I don't want to read the entire thing. I'm going to read the last line first. I compute the gross total income of Surbi for the assessment year 24, 25, 26. That is the financial year 24, 25 under appropriate heads of income on the amount of loss that can be carried forward. Great. That's a perfect question on set off. But she has opted out of the default tax regime. That means the old regime. सारे deductions मिलेंगे उसमें. Will your answer be different in case she does not opt for default tax regime? That we'll do later. There is no need to compute tax payable. So only stop at total income. Thank you so much, ICI, for making it easier for us. Only stop till total income. 6 marks. Let's see how we do it. Guys, as you know, we make a small diagram, which I'm trying to make here. And we put Surbhi in the middle and we put the different incomes in the different cases. And we'll try and then set it off and get a final answer. Let's go. We'll just park all the amounts in the different places. Remuneration received by Surbhi. She's engaged in the retail business of garments and she's also a working partner in two firms, A and B. Very busy life of Surbhi. Remuneration received as partner from a partnership firm A, 9.7 lakhs, deductible while computing the income of the firm. Guys, as you know, you can get salary from a partnership firm, but when you get salary from the partnership firm, that is taxable under PGBP and you don't get standard deduction. So I'm just writing this is a normal business. 9,70,000 is my profit from this partnership firm salary. Next. Income नहीं loss from intraday trading in shares of Indian companies listed on the recognized stock market नहीं करना चाहिए था intraday trading कर लिया and you made a loss of 4 lakh. Unfortunately, this is called speculative loss and it can be set off only against speculative business income. So I'm going to take that and I'm writing it here. This is how much is the loss. Let's check the loss. 4 lakh rupees. Unfortunately, so 4 lakh is the loss. I'm going to write this loss slightly lower and I'm going to put a loss here and I'm going to put a star mark that is unique blood है. इसको किसी और के साथ set off नहीं कर सकते हैं unless you have other speculative income. Next, income from activity of owning and maintaining race horse. After intraday trading, race horse किया, so 7 lakh income होगी. That's a good thing. So this is IFOS and I'm writing here OM horses, owning and maintaining race horses, and 7 lakh rupees की income हो गई है वहां से. All right. Long-term capital gain on sale of property computed as per the provision of the Income Tax Act, 9,20,000 is my long-term capital gain. I'm writing here my long-term capital gain is 9,20,000. Let's see. What else is there in the income? I'm just parking it, set off बाद में करेंगे. Interest paid on loan taken for repair of self-occupied house property 1.2 lakhs. Guys, if you have a self-occupied house property, can you get deduction? Yes, only one, which is interest. But if the loan is taken for repair, reconstruction, renovation, you will get only maximum 30,000 deduction. So here I will get house property. I'm writing house property SOP. There is a loss of 30,000 in house property, which I can set off against any heads of income up to 2 lakh rupees. Next. Amount received in advance towards sale of shop, which was later forfeited by the buyer, could not comply with the condition. Guys, this is an amount which you have earned. Guys, if there is income, there will be tax. This 5 lakh rupees forfeiture will be taxed under IFOS. I'm writing 5 lakh rupees. This is general IFOS income, 5 lakhs. So I'm going to cancel it from here. General income, which is 5 lakh. Always remember losses, I have to put in brackets. Next. Share of loss from partnership firm B, guys, share of profit from partnership firm is exempt. Salary is taxable, interest is taxable, but share of profit is exempt. So share of loss also will not be allowed to be set off. So this will go as a working note, and the working note will be very simple. Share of loss from partnership firm is exempt. The income is exempt under section 10 to A, and hence the loss will not be allowed to be set off. Loss from betting. This also is a working note because loss from betting, unfortunately, when you win money in betting, the government is with you. But when you lose money, the government is not with you. So this one will not be allowed to be set off. Neither will this will be allowed to set off. So two working notes there. Or you can combine the working notes as well. Interest on FD gross is 0.8 lakh. The fixed deposit of 10 lakh was gifted to her by her father-in-law. Now, guys, when a father-in-law gives Surabhi something, of course, that asset will not be taxed, but their income will go back and will be taxed in the hands of the father-in-law. So this will be a working note. I will not include it in Surabhi's income. This amount, 80,000 rupees, will be taxed in the hands of the father-in-law. There's a section in clubbing of income. Following are the losses brought forward. Guys, the losses brought forward are great, but one condition is the brought forward losses cannot go outside their house or their room. That is quarantine stamp, if you know my shortcut. Long-term capital loss of 3.8 lakh. I'm writing long-term capital loss 3 lakh 80,000, which I can adjust against long-term capital gain. Yes. And loss from activity of owning and maintaining race horses. Race horses made 25,000 rupee loss, which also I can set off. So this looks like my question. Now let's solve. How do we solve this question? Always focus on the losses first. 30,000, can I minus it from anywhere? Yes. The closest I can see is my PGBP income of 9 lakh 70. Can I minus 30? Yes, I can minus 30 from here. So this becomes 0. 9 lakh 70 minus 30 is 9 lakh 40. Next, focus on the losses only. 4 lakh rupees, there is nothing we can set it off. So this will be carried forward. This will be another working note. 25,000 and 7 lakh can be set off. So my income will be 6 lakh 75,000 here. 9 lakh 20 and 3 lakh 80 can be set off. So 9 lakh 20 minus 3 lakh 80 can be set off. So my income here, I'm just cancelling is 5 lakh 40. Let's check if there is any other loss. There is no other loss. So let's see the numbers now. 9 lakh 40 will be taxable in a box. 6 lakh 75 will be taxable in a box. 5 lakh will be taxable in a box. And 5 lakh 40 will be taxable in a box. Only one loss to be carried forward. Let's total up 9 lakh 40 plus 6 lakh 75 plus 5 lakh plus 5 lakh 40. My total income is 26 lakh 55,000. My gross total income or my income is 26 lakh 55,000. And how many carry forward of loss? One. That will be your answer final. Now, if she is in the new scheme, guys, you don't get deductions, etc. And guys, one big change in set off and carry forward. If there is a house property loss, that cannot be set off. So this 30,000 which we set off, we cannot set it off. So this 9 lakh 40 will not be 9 lakh 40, it will be 9 lakh 70. Can speculation loss be carried forward? There is no problem with that. Can OM horses, owning and maintaining horses, can all of this be done? Yes. So the only thing is this 2 lakh 26 lakh 55,000 will be increased by 30,000. And the answer is for the new scheme, which is called the default tax regime, is 26 lakh 85,000. So that is my only gross total income change. And my carry forward will now be 2 or 1. I'll tell you guys, house property loss now cannot be carried forward. In fact, SOP interest only will not get a deduction. So carry forward again will be one, the same 4 lakh rupees. I sweet 6 marks. Thank you, Surbi, for making this question very easy. On a difficulty level, it is, I think, 3 on 10. Next, specify the persons who are not required to pay advance tax. Now, guys, this is the kind of question because of which we might not go to question number 4. We might do question number 2 and 3 and finish it off there because, guys, there is some theory question here which I want to avoid. Let's see if we can do that. Guys who are not going to pay advance tax, there are few people. That means if you're a senior citizen who's not doing any business, then you don't have to pay advance tax. If you're into presumptive tax 44 AD and 44 ADA, then you have to pay only the last installment of advance tax. And on 4 incomes, A, B, C, D. A is sale of asset, B is new business, C is casual income, and D is dividend. You don't have to pay advance tax till you earn them, and in case of dividend, till you receive them. These have been discussed in the class, and you should know them very well. We'll move ahead to the last one. This is point number B before we go to GST. I state with proper reasons whether the following statements are true or false. That's it. True or false? Yes, but you have to give reasons also, guys. Yes. An income tax return can be revised only once. No, absolutely wrong. There's a section called section 139.5 which says that income tax return can be revised. You have to first explain it at any time in the assessment year up to 31st December or till you're assessed, whichever is earlier. That you know. But you cannot revise it only once. You can revise it. Even a revised return can be revised again. As long as it's within the timeline of section 139.5, you can revise it as many number of times. So this one answer is false and you will give the reason. An updated return under Section 139.8A cannot be filed if original return is a loss return under Section 139.3. Guys, updated return Section 139.8A can be filed up to 24 months after the assessment year gets over. Guys, that has changed for May 26. That has become 48 months, but I'm talking about this exam. So you can update the return within 24 months after the assessment year. Now, an updated return, guys, is basically to come out clean, to confess to the government if you've done something wrong and if you want to increase your income. You cannot file it if you want to increase your loss. What they have written is the original return is a loss return. Still, can you update the return? Yes, you can still update the return. So here also it is false. Yes, you can, as long as the loss is not increased, if the loss is reducing. Example, if my loss in the original return is 8 lakh, then the government will have to set off 8 lakh for me. But now if I'm saying government, I have only 5 lakh of loss, then the government will have to set off less. This is in the benefit of the government. So hence you can file an updated return. Yes. So sorry. All right, so this is your end of income tax. We will now go to the MCQ part. We'll discuss the MCQs also, and then we will go to the GST part. This is what I will do in the exam as well. Of course, question number one is pending. We'll talk about that also very, very soon. Here is the MCQ part. Let's go to the MCQ part here, Sudipto. Let's take 2 minutes and read this question before we move ahead. So here is Sudipto. Sudipto is a resident individual. Now, again, to read this entire story, guys, such a big story, I first always read the options. Assume incomes of Sudipto and Shanu is 55 and 11 lakhs. Which of the following statement is correct? So there's something about dividend income. We have to be careful who is being taxed on that. Second, clubbing of salary income for Swati. So there's something on clubbing of salary income of Swati. And there is a reduction under 80D. So my reading now should be targeted towards these points only. That's a very good way of doing MCQs case based. Sudipto is a resident individual, 54 years old, gifted shares of an Indian company listed on the recognized stock exchange to his friend Shanu. Such nice friendship, guys, gifting shares to each other to help him financially on the 1st April 2024. The gift deed says that the shares will be transferred back to Sudipto in the event of death of Shanu. So basically, is it a revocable transfer? No, it's irrevocable. You cannot take it back till Shanu is alive. So this transfer is irrevocable transfer. As per section 62, if there's an irrevocable transfer, the income will not come back. So the fair market value of the share of 54 lakh, but they're not talking about the gift tax angle here. Shanu received a gross dividend of 4 lakh 50,000. This will be taxed in the hands of Shanu only. So the answer is the dividend will be taxed in the hands of Shanu. Dividend will be taxable in the hands of Shanu as clubbing provisions will not apply in this case. Absolutely right. That is the first and the right answer. We go to the next one. Sudipto is engaged in the business as a retail trader as a proprietor. During the year financial year 21-22, 2-3 years back, he paid 25,000 to his wife Swati as salary, being marketing in charge. Swati does not have any professional qualification or experience for the job. Guys, this is unreasonable or excessive payment. Guys, this is not allowed as a deduction for Sudipto. This income was clubbed in the hands of Sudipto as per clubbing provision in financial year 21-22. Absolutely right. Then, guys, Swati took it very personally. She did her MBA and she did not get any salary from 20,000 to 2024. 2 years she did her MBA. She completed her MBA in marketing only, guys, and then again joined the husband's business, getting a salary of 55,000 per month. Now, guys, this is deserved by Swati. So this income will not come back to Sudipto. This income will be taxed in the hands of Swati. So salary of Swati will now be taxed in her hands as now she's required qualification. Absolutely right. So this is the right answer. Perfect. Next. During the financial year 24-25, Sudipto paid 54,000 as medical insurance premium by way of account paycheck for his senior citizen parents who are non-residents. Guys, if you have senior citizen parents, then actually the limit is 50,000, but because they're non-resident, the limit reduces to 25,000. There's a section called section 80D. In that, the answer is 25,000. Let's see the options, guys. This option is 25,000. This brings us to 2 marks, plus 2 marks, plus 2 marks, 6 marks closer to our dream of clearing the exam well. We'll go to the next scenario. Again, we'll do the same thing. We'll first see the option before we go to the case scenario. So in this case scenario too, Renu has some questions. Let's see what the questions are. Which of the following statements is correct? One flat will be considered SOP. Something about SOPs. We'll have to look at the SOPs. Assume being ship pays areas of rent to Reno. So there'll be some areas of rent which are being paid. Remember section 25A. And last is which of the following statements is correct as far as the taxability of buyback of shares. So there's something called buyback of shares, which we were expecting, remember, because this is a new amendment. Let's talk about it. So Renu, an individual aged 48 years, owns two flats, A and B in Hyderabad. Can a person own two flats? You can own 20 flats also, but SOB benefit of interest deduction will be given only for two flats. She lives in flat A and give flat B to her in-laws for residential purposes. She does not charge any rent from them. In the month of April 2024, she entered into an agreement to buy flat C, third flat, from the builder in the same area as other flats in the situated. In the month of September 2024, she took possession of flat C and started spending her weekends there. So, have you taken possession? Have you made part payment? Yes. Registration not done is not a problem, guys. It's almost like you're joining a class and not getting an ID card, but you're still part of the class. All the three flats are identical in size and other respects. Let's see the question. One flat will be rated as self-occupied? No. Any two flats will be rated as self-occupied of her choice, and the third flat will be deemed let out? Absolutely right. This is the right option. This is the right answer. We move ahead. She has one more flat D, which was let out on a monthly rent of 45,000 to Mr. Shuk. Four flats, guys. She's very rich. During the financial year 21-22. Mr. Shuk did not pay rent for 3 months. So 45,000 into 3 months is unrealized rent. Renu sold the flat on 31st March 2024. Now, guys, is he paying areas of rent? Renu sold the flat. Have they given? Yes. This is a question. Assume Shipik pays the arrears of rent on 20th June 2024. What will be the treatment of such rent received? Arrears is taxable. Amount you spend is not given a deduction, but you get a standard deduction of 30%. So 1,35,000 minus 30%. So 94,500 is taxable. 94,500 is the right answer. Here we go. And last one, guys, is on buyback. Let's see. She owned 5,000 shares in a company listed on the recognized stock exchange in India, an Indian company which was acquired on 1st February 2022 for 180 per share. This is a cost price. In 2025, on 1st October 2024, guys, now a change has happened. Buyback is now taxable in your hands. There are two ways it will be taxed. First, the entire amount will be received, will be taxed under IFOS, and your cost will go under capital gain as a loss. So let's see how much is the company buying it. They bought back 2,000 shares at 420. So 2,000 into 420, this will be the income under IFOS as deemed dividend. And capital loss, whatever is your 2,000 shares purchase price into 180, this will be as a capital loss under capital gain chapter. So 8 lakh 40 and 3 lakh 60. So this is the answer. Let's see what they've asked of a buyback. PQR shall be liable to pay tax as additional income tax on the income arising in respect to such buyback shall be exempt. No, 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 no. That is before 2024, 1st October or 31st October. 8 lakh 40 will be treated as deemed dividend in the hands of Renu. Absolutely right. 4 lakh 80 will be long-term capital gain. No. 4 lakh 80. So answer is B. That is 8 lakh 40. Guys, again, 2 marks, 2 marks, 2 marks. Sweet 6 marks. Guys, DT will help you clear this exam very, very easily. Next. This is another question on residential status. Residential status, guys, got a 6 marks there, plus 1 mark, 7 marks totally. AP and Sons HUF is controlled by Amrendra, the Karta of the HUF. So basically, what are they asking us? Residential status of AP HUF. So HUF, the section is section 6.2. It all depends on control and management. If control and management is remotely from India, then it will become a resident. Amrendra is an Indian citizen, stays in country T and regularly visits India. During the financial year 24-25, he visited India for 190 days and managed the affairs of the HUF. So 190 days he stayed in India, managed the affairs. So the HUF is a resident. But now what kind of resident? Is it ROR or is it RNOR? That depends upon the Karta and two additional conditions. Let's see the additional conditions. In the last 7 years, he has to stay in India for 730 days. Let's see. During the immediately preceding 5 years, he visited India for 70 days. So 5 into 70, which is 350 days, but he has to cross 730 days. So I'm just writing here 350 days plus 185 plus 185. So totally 185 and 185. If you do this number, it's 720 is not crossing 730. So guys, I'm not even checking the second condition because this condition is not fulfilled. The HUF will be a RNOR. Resident, because control and management of the affairs is partly managed from India, and not ordinary resident because the status of the karta is resident but not ordinary resident. Absolutely right. Option number D gets you one sweet mark. Let's go to the next one, guys. This one is on TCS. Again, we had expected TCS came there also, and it is here also. Guys, probable questions are very, very important, and they are here. Ravi, a resident Indian, bought an overseas tour package from Karthik. Guys, incredible India. If you buy an overseas tour package up to 7 lakh rupees, you'll have to pay TCS extra of 5% and above 7 lakh at 20%. And paid 7 lakhs as the cost. So 7 lakh into 5%. So 7 lakh into 5%, that is 35,000 rupees would be the TCS here. Next, he also remitted 12 lakhs to USA under liberalized remittance scheme. For liberalized remittance scheme, up to 7 lakhs, there is nothing. So 7 lakhs, the zero. And above 7 lakhs, that is 12 lakh minus 7 lakh on that 5 lakh. The TCS is at the rate of 5%. So 25,000 here, 7 lakh. Up to that, the zero, 5 lakh into 5% is basically 25,000. So in these two cases, this will be the TCS that has to be paid to the government. 25,000 plus 35,000 is basically 60,000 is the right answer. And that more or less completes our DT paper till we go to question number 1. Now let's see what is in question number 1, guys. I'm very confident we'll be able to do that. And whatever we do will be a bonus because we've reached so far so good. Guys, Mr. Ram. Guys, there's Prabhu, there's Ram, a lot of gods helping us to clear this exam. Is a resident individual, 58 years old, engaged in the manufacturing of textile items. Guys, they are manufacturing, so you get additional depreciation. I know there will be a question which says compute total income and tax liability at the end, but which regime is he following? Let's see. You're required to compute the total income and tax liability of Ram under both the regimes. So first we'll do as per the old regime and then we'll convert it as per the new regime. Let's see. And they've also given us CII. In the end, I'll tell you that salary CI, why it was given in CI, salary the CI, but right now let's focus on this question. We will first focus on the 52 lakh, which is the starting point. Next, after debiting or crediting the following item is like Diwali Safai. If the debit or credit is right, don't do anything. But if it's wrong, you'll have to take the proper adjustments. Depreciation as per income tax rules is 28 lakh. Is that okay? Yes. Including additional depreciation on new plant and machinery, 1 lakh 50. Is it okay? Everything looks okay here. No adjustments here in this case. Interest amounted to 2,10,000 for short payment of advance tax as per section 234B related to assessment year 24-25. Unfortunately, you have paid some interest on short payment. Interest on income tax is not allowed as a reduction. Have you minused it? Yes. So what do you need to do? Add. So I'm adding 2,10,000. So this is done. Next, 3,50,000 paid to a contractor for carrying out whitewash work at the factory premises. Basically, this is a contractor. Tax was not deducted at source on this payment and the contractor did not file his return of income. Unfortunately, you minus the entire thing, but you can only minus 70%. So 3,50,000 into 30%, that is 1,05,000. I'll have to add it back. This is basically disallowance, so I'll have to add it back. Next, this is also done. Contribution to Prime Minister's National Relief Fund. Good, you've contributed, but you won't get a deduction in PGBP. So I'm going to add it back. So this is 3 lakh added it back. But I'm going to write here that this deduction will be available under 80G. So I'm just writing here 80G, this 3 lakh will be available as a deduction whenever we reach gross total income. After that, we can minus this. This one is also done. Expenditure towards advertising charges on a brochure of a political party is not allowed. You minus 40,000. I'll have to add it back. And is this, sir, available under 80GGB, GGC? Yes, it's available under 80GGB, but only to companies. This guy is an individual. This is not allowed there. So this is unfortunately disallowed. Interest on term loans. Guys, in business, you take loans. He has taken a loans obtained from a cooperative bank, but not paid before the due date of filing return of income. Guys, the government has a rule called Section 43B. And they say that there are 5 expenses called M, Tree, or Merit. In that, interest, if you don't pay to the bank, you won't get a deduction. So this is not paid and you won't get a deduction now. You will get it in the year you pay. So this 2,60,000 will have to add it back. Unfortunately, it will be added back. Next. Contribution towards pension scheme of the employees 1,50,000. The eligible salary and dearness allowance for the pension scheme referred to under section 80 CCD is 10 lakh. As you are the employer, you are the master. You're contributing to the employees' provident. This is which fund? Pension scheme, that is NPS. Now, of course, you can contribute 1,50,000. I would give you a deduction also of 1,50,000, but the government says no, no, no. This deduction will be available to you only. So you minus 1,50,000 already. I'm just cancelling this. This is already minus, but the government says you will get only up to 10% of the salary. So 10 lakh into 10% is 1 lakh. 50,000 extra you have minus, so that will be added back. Next, this one is also done. Industrial power tariff concession of 2 lakh 50 received from the central government. Guys, you have to pay some extra amount of power bill, but they reduced. For example, if your house bill is 10,000, the government reduces it to 8,000. Is that a benefit? Yes. Should it be added? Yes. Has it already been added? Yes. So no adjustment here. This is also done. Interest from banks on FD is 1 lakh 50, which is a good income, but is not part of PGBP. So remove it from here. Have you added it? So I will minus it from here, and I will take it to head of income of IFOS. I'm making IFOS income head of income here. IFOS 1 lakh 50,000. Is this the gross amount? Yes. Now, guys, any bank who pays you interest of 1 lakh 50 with they will deduct TDS. I'm just writing here. So in the end, we can take credit. There will be TDS, and I'll write it here. There will be TDS under section 194A. 10% of 1 lakh 50 is 15,000. You can take credit. Also, this is interest. So can I take a deduction under 80 TTA? As let's see his age, 58 years. But this is interest on FD, so TTA will not apply. Next, cash gift from father, guys. Gift from father is precious. You will realize very soon that gifts from father is very precious. My father has gifted me a Royal Enfield bike when I cleared inter exams, and that is still now special. This cash gift from father is never taxable, guys. There is no tax. Even under IFOS, it is not tax. So I'm just going to put it here. All right. Any other adjustments? 10 adjustments done here. Expenditure pertaining to previous financial year 23-24. Why are we taking that expense this year? Maybe it's paid this year. Was allowed on due basis. That means you were allowed to minus it then, but paid in the current financial year in cash, 35,000, will basically you allow Ram prepares his accounts on mercantile basis. If he's already taken a deduction there, will you again get a deduction? Not at all. But you have paid it in cash, which is not supposed to be paid more than 25,000, sorry, more than 10,000. So this one you'll have to add it back. So I'm adding back 35,000. Unfortunately, you should not have paid it in cash. Next, audit fees for the year 23-24. Last year's audit fee 75,000. TDS deducted but not deposited in the relevant previous year. So last year you would have not got 30% of this deduction. 75,000 into 30%, 22,500. But TDS was deposited in this year. So will you get the deduction now? Yes. So 22,500 I can minus as a deduction now. This looks like all the information. Yes, let's compute the total income. So I'm just going to add all the numbers. 52 lakh plus 2 lakh 10 plus 1 lakh 5 plus 3 lakh plus 40,000 plus 2 lakh 60 plus 50,000 minus 1 lakh 50 plus 35,000 minus 22,500. Basically, the answer of PGBP is 60 lakh 27,500. I'm putting this in a box. IFOS is a sweet 1 lakh 50. I'm putting that also in a box. So 60 lakh 27,500 plus 1 lakh 50. My gross total income is here. My gross total income is 61 lakh 77,500. Always check for three hidden deductions. 80 TTA, not applicable. 80 TTB, he is not older than 60, so not applicable. And 80 GG is also not applicable. So I'll minus 3 lakh. This 3 lakh I'll minus. So I'm getting a number called 58 lakh 77,500. Now, while this is being done, I have to now calculate this is my total income. Now I have to calculate the tax. Now, when you calculate the tax, check for two incomes. Is there any casual income? No. Is there any capital gain? No. So you can just directly use the slab rates. But because the income is more than 50 lakh, there will also be surcharge. Let's see. Up to 2.5 lakh is 0. Then 12,500. Then 1 lakh. This is still 10 lakh. Minus 10 lakh if I do here, that gives me 48 lakh 77,500 into 30%, which gives me 14 lakh 63,250. If I add both these numbers, my basic tax is 15 lakh 75,750. Now on that, there will be surcharge at 10%. So into 10% is 1 lakh 57,575. If I add both these numbers, it gives me 17 lakh 33,325. On that, if I add into 4%, if I add, that gives me total number of 18 lakh 2,658. From that, I can minus my TDS of 15,000. So that gives me a total tax liability or tax payable of 17 lakh 87,658, which I'm going to write round off at 660. This is my tax liability as per the old scheme. Now, sir, will we spend so much time doing the new scheme? Not at all. We just take the total income and I'll show you how to do it as per the total income. The total income as per the old scheme is 58 lakh 77,500. Now we'll go headwise and we'll see what is not allowed. In IFOs, there is no change. In PGBP, you don't get some things. Additional scientist specified awesome coaxing, that's my shortcut. These are 5 deductions which you don't get in the new scheme. Let's see which of them have you taken. Have you taken additional depreciation? Yes. How much is your additional depreciation? Let's go there. It's 1,50,000 additional depreciation. So you'll add it back. 1,50,000 I'm going to add back. Next, scientific research is not there, outsiders. Specified business is not there. 10A deduction awesome area is not there. So only this. And that 3 lakh deduction of 80G, unfortunately, you don't get. So I'll have to add that also back. So that is 3 lakh rupees. So I'm adding 58,77,500 plus 1 lakh 50 plus 3 lakh. That gives me a total income, a fresh total income of 63 lakh 27,500. Now let's calculate the basic tax. As you know, guys, the slabs here are different. 0 to 3 lakh, 3 lakh to 7 lakh, 7 lakh to 10 lakh, 10 lakh to 12 lakh, 12 lakh to 15 lakh, and more than 15 lakh. People who are watching this who are from May 26 exam, and your slabs are different now. So this is 0. This is at 5%. This is at 10%. This is at 15%. This is at 20%. 25 is not a lucky number for her, and more than 15 lakh is at 30%. So let's do the calculation, guys. Up to 3 lakh is 0. Plus, I don't have space here, so I'm going to write it here. Up to 3 lakh is 0. 3 lakh to 7 lakh, that is on 4 lakh into 5% is 20,000. Next, 7 lakh to 10 lakh on this gap of 3 lakh into 10% is 30,000. Plus 10 lakh to 12 lakh, the gap is 2 lakh. 2 lakh into 15% is 30,000. And 12 lakh to 15 lakh, the gap is again 3 lakh. 3 lakh into 20%, that is 60,000. And last, more than 15 lakh up to this number, that is 63 lakh 27,500 minus 15 lakh, 61 lakh, oh, sorry, 63 lakh 27,500 minus 15 lakh is 48 lakh 27,500. You can also do in the calculator into 30%, is 14 lakh 48,250. I'm going to add all these numbers. So my basic tax is 15 lakh 88,250. Guys, this is my basic tax. Will there be surcharge here also? Yes, into 10%. So 10% is 1 lakh 58,825. If I add both these numbers, it's 17 lakh 47,075. If I add cess, that is 18 lakh 16,958. If I minus 15,000 of TDS, it is 18 lakh 1,958, which is 960. So guys, the old scheme is more beneficial to this person, guys. This is your answer. Do it right in the end. So even if you take a little more time, Ram is going to wait for you. And all right, so this is question number 1B or 5B actually, 1 for GST, but 5 actually in the paper. Let's see what this question is asking. This is for 5 marks here. Let's see how well we can score these 5 marks in GST. This one, again, I'm reading the last line once again. Compute the GST liability for the month of February. So this is the same month like February, like the fifth sum A part. But this one just talks about the GST liability to be paid. Let's see how this works. Again, the same thing, SL, supply leads to liability. So we'll have to look at supply leads to liability, and we'll have to see how this works. ABC Corporation Private Limited is a registered dealer of Mumbai, furnishes the following information for the month of February 2025. This is interstate sale of taxable goods. This is a supply. Provided accommodation, this is a supply. Receipt for services, this is a supply. And professional fees paid, this is receipt. We'll talk about that, the 4 of them. And then there is other information. This turnover of this company was 2 crore last year. All the amounts given above are exclusive of GST. Let's see the first one. I'm putting in 3 columns here. One is IGST for interstate, and one is CNSGST, CGST, and SGST here. Interstate sale of taxable goods, the amount is 2 lakh rupees, but 50,000 was received in advance in January 2025. As you know, guys, in case of goods, there's a section called section 12, and in that 12.2, and there they've said that in case of goods, if you receive any advance payment, only for goods, not for services, that amount will not be subject to GST in that month. It will be subject to GST later. So even though this advance was received in January, this supply would happen in the month of February. So GST liability will happen in the month of February. So on the entire 2 lakh rupees, because it is in the same state, it is 99% each. So 18,000 CGST and 18,000 SGST. This is the number we start with. Next. Provided accommodation services in Mumbai with charges per person per month is 18,000 per month. The accommodation is supplied for a minimum period of 99 days. Guys, this is like residential accommodation. This is not a hotel because it's a long period of stay for residents. And hence, in this case, this is exempt. There is no GST. So, year dash and year dash. This is notification number 17 of 2017. Next, received for services. So you provided services of pure labor contract. If you remember, pure labor contract for single residential unit forming part of residential complex is exempt, but only when you're constructing. Example, I'm a contractor, I'm constructing a residential unit, individual, not part of residential complex. And on that labor charges, I will not charge GST. But this is not for constructing, this is for repair. So there will be GST. So this is 50,000. Again, is it intrastate? Yes. So 99% each. So this is 4,500 and this is 4,500. And last is professional fees paid. Now, when you pay is when you're receiving. So ideally, guys, this is receiving services, purchase of services. But let's see what is interesting here. These are professional fees paid for taxable services to Messrs. Udan Mehta located in a non-taxable territory. Non-taxable territory means outside India. This is Bahar Se services. As you know, guys, if you take services from outside India, then there will be GST on that payable by you under RCM. So on this, you will have to pay under RCM. Just a second, 1 second. So if you're getting services from outside India, there will be GST. There is a section called Section 7(1)(b). In that, there was GST, but you'll have to pay it under RCM. Now, RCM has three implications. Let's see what are the three implications under RCM. First, you have to pay to the government. So on 70,000, this is interstate. So 70,000 into 18%, this is your liability. I'm writing 12,600. This is what you need to pay. But you need to pay this to the cash ledger because you know RCM liability has to be paid through cash ledger. So this 12,600 has to be paid through the cash ledger. This is definitely a liability you'll have to pay. And you don't worry, you can also get a credit for that. So the same that you pay, because anything that you purchase, you also get credit. So in the credit ledger, again, there is IGST of 12,600. So this is how it works. So this 12,600 comes in three places because again, I'll repeat why this RCM will come in three places. One, is it something that you need to pay to the government? Yes. So it will come in a liability, but it will come in your cash ledger because you have to pay through the cash ledger, and you can also take credit because ultimately it's a purchase on which you can take credit. So this is it. You can net it off. You can solve the question. This credit you can use to pay first IGST, then C and SGST. So this one, 12,600 can be netted off here. But ultimately, this you'll have to pay through the cash ledger. So 12,600 you'll have to pay through the cash ledger only. Now, what about the balance? 18,000 plus 4,500, 22,500 minus 12,600 you can do, and minus 12,600 you can do. And the balance, whatever you get, you have to pay through again the cash ledger. Let's do it. 22,500 minus 12,600. That is 9,900 here and 9,900 here. So this also you have to pay through the cash ledger. This is what it is. This is a 4 or 5 mark question. Again, both are from the same chapter called ITC. Let's look at the next question, which is of 5 marks, which is for Veer Trading Private Limited. Let's see what this question is. This is question number 6A. Veer Trading Private Limited is a registered entity under GST in Jaipur, Rajasthan. So they are registered entity in Jaipur, Rajasthan. It is engaged in the wholesale trading of various sports items. VTPL furnishes the following information regard to its inward supplies. Guys, inward supplies basically means purchase on purchase. Will you get credit or not is the question here. I'm putting in 3 columns, I, C, and S. Let's see how much credit you will get. Let's see if there's some additional point or what if they ask you. Assume all the above transactions in the course of intrastate, that means C and SGST. Subject to information given above, assume all other conditions necessary for availing ITC have been fulfilled. That means you have received the goods, all conditions are fulfilled, and all the suppliers are registered under the regular scheme. Determine the amount of ITC that can be availed by V trading for each individual item, as well as the total eligible ITC for the month of February, again by giving necessary explanation. Let's see. The first one. As for the policy of the company, the managing director of the company has taken a membership of a local sports club on behalf of the company. The company paid fees monthly. So on this amount, will there be GST? Yes, but as you know, there's a section called Section 17(5). In 17(5), the clubhouse membership is completely blocked. So 17(5)(a), this is blocked. So there will be no GST here also, or here also. This will be a working note that as per Section 17(5), the GST paid on clubhouse membership is completely blocked. I just think some things that you should know. Blocked is clubhouse membership when you go to a salon, that is blocked. Life insurance is blocked. Holiday, all that is blocked under 17(5). Next. Purchase equipment from original equipment manufacturer OEM as X Works contract basis on 26 February 2025. Now, what do you mean by X Works? That means if I'm buying some machinery, let's say I'm buying some machinery from Samsung. Now, Samsung will not deliver it to me, they will deliver it at their factory. That's called X Works delivery. I have to collect it from there, or I have to ask my transporter to collect it from there. As for the terms of the contract, the goods are to be delivered by the original equipment manufacturer to the transporter on behalf of the recipient. So, example, let's say I'm Sourabh Mutha, I'm buying some goods from Samsung. I will buy it at their factory gate. I will arrange the transport, and this is how I will buy the goods. The OEM handed over the equipment. Example, Samsung handed over the equipment to the transporter on 28th February. Is in the month of February? Yes, but I physically received them in the month of March. Now it's very logical. If I'm arranging the transport and the transport has received the goods, the third party has received the goods on my behalf. So it's as good as I have received the goods. So can I take the credit on this? Yes. So this is 10 lakh. It is interstate into 6% each. That is 60,000 rupees I can take as credit under both C and SGST. The point is, can I take the credit in February? Yes, I can. Assumption is that transporter is received, so you've also received it. There is an CBIC, that is the GST Council has given a notification, but that's okay. On fifth year of the incorporation, VTPL arranged an event from Messrs. Daksh Event Company for customers meet. Guys, can you arrange an event? Yes. Are you purchasing services? It is in the course of business. Can you take credit? Yes. Messrs. Daksh Event Company charges a single price of the event charge as 2,50,000, which is inclusive of food charges. Guys, generally for food you don't get credit, but this is not food. This is event. Are they naturally bundled, food and event? Yes. And which is the principal supply, the event organizing? So on the event organizing, 2,50,000, whatever the GST, will I get the credit? Yes. So first up, it will not be 14% because this is not supply, this is composite supply. You'll have to write a working note that this is composite supply as per section 8 because a naturally bundled and the principal supply is event. And on that 2,50,000, it will be 9% each. So 2,50,000 into 9% each, 22,500 credit here and 22,500 credit here. Both of them you will get credit. Don't miss out on the concept of composite supply. Read it if you want, and this is how you will answer. Next. Purchase a truck. Guys, truck is a motor vehicle. It's VAM, vessel, aircraft, motor vehicle. But because it's for transportation of goods, is it allowed? Yes. So 2,10,000. But you have basically bought the truck, and as depreciation under Income Tax Act 1961, you have claimed on the entire amount you've claimed depreciation nahi karna tha. There is a section called section 16.3 which says that in case you capitalize the entire amount, then you will not get credit. So on this, I will not get any credit. So ultimately, the credit that I will get is 82,500 CGST and 82,500 SGST. Notes will be one block credit note here, X Works contract note here, a note here on composite supply, and note here on section 16.3 that since the entire amount has been capitalized, you will not get any credit. We progress, we promote ourselves to question number B. This is 6B. Examine the following independent cases and determine the place of supply. My favorite chapter, because all you need to know is which is the place of supply. This is section 12 and section 10 for goods, 12 for services. Let's see the first one. Mr. Mukul is a bank manager transferred from Kolkata, West Bengal to Jodhpur, Rajasthan. What a big shift from Calcutta in the east to Rajasthan. It's a big shift. His family resides at Ranchi, Jharkhand. He hires Fastman Couriers Private Limited, a registered company in Kolkata, to transport his household goods from Ranchi to Jodhpur. His transportation of goods is a service. So the section is section 12. And if you remember, 8 kgs of goods, section is 12.8. These are shortcuts which I use in my class. So 12.8. And they say that is this a B2B supply? No, this is not a B2B supply because while Fastman is registered, Mukul is not a registered person. So it is B2C supply. And in case of B2C supply, no one is taking credit. It's very, very simple. Wherever the goods are handed over for transportation, that is Ranchi, is the place of supply. In the first case, you get 2.5 marks for this. Next. Messrs. Ravi Builders of Pune, Maharashtra hired Messrs. Builder and Company, an architectural firm registered under GST law at Ahmedabad. So Builder and Co. This is the one who's supplying the services. There is Ravi Builders, which is in Pune, which is receiving the services. And this is for designing an architectural plan. Again, this is service section is 12. And because it's relation to immovable property, section is section 12.3, wherever the immovable property is located. But here, guys, it's a 21-story nice big building, but not in India. It is in Canada. Now, when it is abroad and both of these guys are in India, then the boomerang you throw, it comes back and it goes to the location of the recipient. The location of recipient is Ahmedabad. No, the location of recipient is Pune, Maharashtra. So in the second case, Pune, Maharashtra is the place of supply. Remember, if it's abroad, it comes back to you and it is Pune, Maharashtra, which is the place of supply. All right, that brings us to question number 7. In the month of February, again, Mr. Venkatesh started supplying of both goods and services from the states of Rajasthan and Tripura. So there is Rajasthan and Tripura where he is supplying from. His statistics for the month of February are as under. So his one unit is in Rajasthan, one unit is in Tripura. But what are they asking you for? Let's check that. The last line is assume all the figures are excluding GST and amount given to be considered as value determined as per GST law. Based on the above information required to determine, yes, what are you required to determine? Compute aggregate turnover of Mr. Venkatesh. As you know, guys, aggregate turnover means whatever you're selling outside except IIGN. You will not take any inward supply. If that is there, you will exclude it. You will not take interest. You will not take the GST. If you're supplying with GST, you will take excluding GST amount. Example, if I'm supplying this pen for 100 plus GST 18, 118, I will include in my aggregate turnover only 18. And non-taxable, guys, IING actually the shortcut is, and non-taxable at only schedule 3. These four things you will not have to include, and you have to include it as a family turnover is full family. So will I take 11 lakhs? Yes. Will I take 5 lakh? Yes. 11 plus 5 is 16. Plus, will I take 1 lakh? Yes, 1 lakh is 17. Plus interest rate supply of any supply you will take, even 2. Yes, even 2. So total is 19 lakh is the aggregate turnover right now. Let's read. In the state of Rajasthan, we're talking about Rajasthan. Intrastate supply includes commission received as an insurance agent from an insurance company worth 50,000. Doesn't matter. Even insurance, as long as it's outward supply, as long as you've sold some policies and got insurance commission, that's perfectly okay. In the state of Tripura, this is Tripura they're talking about, this 5 lakh rupees. Intra-state taxable supplies include inward supply of service of 1 lakh. So inward we don't have to include. So I'm minusing it. This becomes 4 lakh. So the total now becomes not 19 but 18 lakhs. All right. Any other? For sale by Mr. Venkatesh in the capacity of agent, guys, even as a capacity of an agent. Example, if I'm selling these pens branded of Reynolds and I have my own pens, my aggregate turnover is both the turnover. So invoice was issued by the name Mr. Venkatesh. Perfect, no problem here. And the aggregate turnover is 18 lakhs. Will Mr. Venkatesh be liable to be registered under GST? Yes, guys. For registration, there is a section called Section 22, which says that this 40 lakh limit will not apply because they're in the state of NT, Nagaland, Tripura, Manipur, and Mizoram. So the 10 lakh limit will apply, and they've already crossed the threshold of 10 lakh, and hence they will have to register. There's an additional point here. Discuss whether your answer in 2, which says that you should register, will it change if the state of Tripura is supplying only intra-state supply, which is exempt goods? Now, guys, example, if you're supplying something which is exempt, that means you don't have to tax, then you will include in aggregate turnover. So aggregate turnover is still 18 lakh rupees. And you still have to consider, but you will not consider now Tripura because Tripura is only supplying exempt supply. So it will not be 10 lakh limit, it will be 20 lakh limit and you don't have to register. So will your answer change? Yes. I repeat again. Why will it change? Because now Tripura is only supplying exempt supply. So will you include in the aggregate turnover? Yes. Aggregate turnover is still 18 lakh, but you will not consider the threshold for Tripura because the Tripura is making exempt supply only. So you'll consider the other threshold, which is 40 lakh or 20 lakh. So can 40 lakh apply? Yes, it can also apply. Let's check. They're not selling any prohibited goods. They're not doing any interstate supply. Let's see if they're doing any interstate supply. No. They're supplying only goods. Yes, they're only supplying goods. Check again. Are they only supplying goods? No, they're also supplying service. Because insurance is service. So 20 lakh limit will apply and they will not have to register. So your answer changes. State in brief the requirement of generation of e-way bill with reference to the rule 188 of the CGST rules 2017. It's just like on the bike you need a license. Whenever there is movement of goods, you require an e-way bill. When the value of supply, taxable supply excluding GST, or sorry, when the value of taxable supply including GST is more than 50,000 rupees, you need an e-way bill. Plus, there are some other places where you need e-way bill. If it's want to voluntarily generate, you can generate an e-way bill. If you're sending goods to a job worker interstate, that is outside the state, you need a e-way bill. And if you're sending handicraft goods, you also need e-way bill. That is rule 188, 138 of the CGST rules. Also discuss in brief the provision of generation of e-way bill in case of supply of goods on behalf of a third person. Bill to ship to model. Example, if I'm A and I'm supplying goods to B, but the goods are to be directly shipped to Mr. C, then in that case, what is the e-way bill requirement? This is a bill to ship to model. In this case, also an e-way bill will be required. You need to create an e-way bill to whoever you're sending if the supply is more than 50,000. Next. Guys, we are at question number 8. This is the last question technically. Rule 86B. Let's talk about that. Guys, before we go to the question, what is Rule 86B? Guys, if my liability of GST is 100, my credit is 120, can I use my credit? Of course, yes. But then how will the government get cash? So Rule 86B is a shortcut is BEG. the government begs you that at least 1% of your GST liability, example, this is 100, at least 1% of this, that is 1 rupee, at least you pay through the cash ledger. That's why I call it begging, because they're only asking for at least 1%. This is not in every month, only in those months when your sales or supply is more than 50 lakh. In that month, at least Rule 86B will apply to you. So Rule 86B of the CGST Rules 2017 imposed restriction on the use of amount available in the credit ledger. If the value of taxable supply is more than 50 lakh in the month, absolutely right. Read the above statement with reference to the provision of the input tax credit and discuss the nature of restriction imposed under this rule and also list out the exceptions. What is the nature of restriction imposed? The nature of restriction imposed is that in the month when your taxable supply is more than 50 lakh rupees, the GST credit ledger can be used, but cash ledger has to be used to pay at least 1% of your liability. That means you can pay 99% to the credit ledger, but at least 1% has to be paid to the cash ledger. Mainly other exceptions. This is the second time this question has been asked. Cash refunded in sorry tax refunded in cash by the government. These are the four exceptions. First, this Rule 86B does not apply to the government authorities, to public sector enterprises. Next, if in the last 2 years you have paid income tax of more than 1 lakh rupees, then this does not apply. If in the last 1 year you have already got a GST refund of more than 1 lakh rupees, this does not apply. And if you've already paid till this month, example, let's say this is the month of September, till this month, April, May, June, July, August, 5 months together, if you see a liability, at least 1% has been paid through cash ledger, then this condition does not apply. So these are the exceptions. This is question number 8A for 5 marks. Let's move ahead. A taxpayer cannot file GSTR1 before the end of the tax period. Yes, GSTR1 is a statement of outward supplies, and you will know your outward supply only after the month or quarter is over. State the exceptions to the above statement. There are mainly two exceptions. One is a casual taxable person. If I'm a casual taxable person, example, I'm in Bangalore, Karnataka, but I'm temporarily making supplies from, let's say, Delhi, and in that case, I'll be registered only for a few days there, up to 90 days. Whenever my GST registration comes to an end, I have to file my GSTR1, not necessarily at the end of the tax period. And second, if my GST registration is getting cancelled, then I need to file GSTR1 in that same month itself. Further discuss any four circumstances where a registered person is debarred from furnishing the outward supply in GSTR1. As GSTR1, if you are, or IF, if you are debarred, then that's a big problem. So you can't make outward supplies. When is the government so upset? When you have not filed your GSTR3B for the particular month. If you're quarterly filing it, if you have not filed your GSTR3B for the particular quarter. Next, if you have not updated your bank details as per Rule 10A within a period of 30 days. And last, if you have been suspended, your GST registration has been suspended, in that case, you are debarred from filing your GSTR1 or your IFF. Perfect. Unregistered person, like you, a student, unregistered, with aggregate turnover up to a threshold limit of registration and supplying goods to e-commerce operators are exempted from obtaining registration. Is that true? Yes. Guys, if you want to supply an e-commerce operators, then you are not supposed to register up to a certain limit here. What are the limits? So you should not be over the 20 lakh limit. In some states, you should not be up over 10 lakh limit. That's the first condition. Second condition, you should not be supplying interstate. Within the same state, e-commerce operators, you can supply. Next, you should have an enrollment number, temporary enrollment number. That enrollment number has to be reflected on the common portal, on the GST portal, you have to reflect it. And basically, you need to register yourself the moment you cross that threshold. These are some conditions that allow you to supply on e-commerce operators, mainly because people supply like on Zepto within the same state. So this is question number 8B. Now let's go to the MCQs. Here are the MCQs on GST. Let's start with the first one. Here we go. Raghu impacts, there are a couple of things that they've given. First, on getting temporary registration, Raghu impacts needs to apply for registration up to which date? That is what we have to discuss. In respect of printing material supplied in the month of February, the company shall pay a total GST. TDS concept is here, so you'll have to focus on that. And last, what is the maximum time limit available for declaring the details of the credit note in the GST return? So 3 questions for 2 marks. Let's go. All right. First, I know this is on TDS sum, so let me recap, guys. What is TDS in this case? Guys, let's say you are electric bike company and you're supplying electric bikes to someone like a government entity. So this is the government entity, and they placed a huge order. The order value is more than 2,50,000. So the government tells them that as per section, is a section called Section 51. In that case, there will be TDS applicable at the rate of 2% only if the value is more than 2,50,000 excluding GST. There are some exceptions here when there are seven, and there are only notified people who have to deduct TDS. So there are seven notified people, which I've given in my lectures, so you know, but government entity is one of them. But there are two exceptions when these seven people are dealing with each other, there is no TDS. And when the location of the supplier and the place of supply, example, electric by company and the place of supply are in one state, example, Karnataka, but the government is in Tamil Nadu, in that case, you don't have to deduct any TDS. Let's see. First, the TDS amounts. Raghu Impex Limited, registered in the state of Uttar Pradesh, was involved in supplying stationery items pan India. So they are in Uttar Pradesh but supplying pens, etc., across India. The company did not opt for registration under GST. They have not opted for registration. The proper officer of GST, based on inquiry, finds that the company is liable for registration and he registered it temporarily on 21st January 2023, as you have 90 days. So February, March, and April, by 21st April, you should get yourself either confirmed or you should appeal for it. So this is 21st April. This is the right answer. We now move ahead. The company made the following outward supply of printing materials in the month of February. Again, let's see. First, to Telangana State Agricultural Department. This is a government entity. Yes. Could there be TDS? Yes. The invoice value is 2,64,000 inclusive of GST. Let's remove GST. So 2,64,000 divided by 105 into 100, that is 2,48,000. Since the value of taxable supply is not more than 2,50,000, there will be no TDS involved here, so it is zero. Of course, here you have to just pick the right answer. MCQs are really nice because you don't have to write elaborately. To UP GST State Department, guys, this is the UP GST Department only. Invoice value is 2,80,000 inclusive of GST at 12%. Again, I'll remove 2,80,000. Divide by 112 into 100 is 2,50,000. Since again it is not more than 2,50,000, there will be no TDS implication. TDS will be zero. And the third one. To Delhi Transport Corporation, government owned transport corporation registered in the Union Territory of Delhi. So you're supplying to someone in Delhi, you're in UP, you're supplying to someone in Delhi, but the place of supply is in Uttar Pradesh to its central source located in Ghaziabad, Uttar Pradesh. So if the location of the supplier and the place of supplier in one state and the recipient is in another state, in that case also there will be no TDS. So here also TDS will be zero. That is the entire amount of TDS. Although this question looked like there is TDS, but the TDS is nil. This is the right answer, nil TDS. Let's look at the last one. In the month of September 2024, company found that while issuing the invoice to a customer, the company erroneously charged higher value. Guys, mistakes sabse hoti hai. Everyone makes mistakes. So you made a mistake. Instead of charging some X amount, you charged 50 to 1,000 extra. Whenever you charge extra, you have to cut it, reduce the amount, so you have to issue a credit note. Such invoice was issued on 31st March 2024. Company issued a credit note on 1st October 2024, which is perfectly okay. The transaction happened in September. You issued the credit note in October, no problem. The company filed the relevant annual return on 15th June 2025. Guys, the year is 23-24. Why is it 22, 23, 24? Because the transaction happened in 23, 24. You can issue a credit note, but the credit note has to be uploaded in the return by to any of these two dates, NA. What is NA? Annual return filing date, which is basically 15th June 2025. Or after the year end 30th November, so 30th November 2024, whichever is earlier. So this 30th November is the last date by which the credit note can be included in the return. What is the maximum time limit available for declaring the details of this credit note in the GST return? With respect to the said transaction, it is not 15 June, it is 30th November 2024. All right, we go to the next one. This is case scenario number 4. There is Mahadev Housing Society registered under GST in Lucknow, Uttar Pradesh. So housing society, let me tell you guys, whenever they charged maintenance to their customers or to their residents, example, I stay in a building which has 100 flats. If they charge me maintenance, excluding municipal taxes, etc., which they take from me and directly pay to the government, those maintenance charges, if they are more than 7,500 per month, only then there is GST for residences. Let's see what is happening here. The society has 200 flats, so it's a big society, and 20 shops are under 3 BHK flats, 4 BHK flats, 3 BHK flats, 4 BHK flats. So there are 4 blocks, 50, 50, 50, 50. And there are shops, 10, 10, 20 shops in total. Because this is a big sum, I'll straight read the question, guys, here. Based on the facts of the scenario, choose the most appropriate answer. The total value of exempted outward supply of the society for the month of January is as follows. So on which there is no tax. Let's see that. The society received and paid the following amounts in the month of January. Amount from each 3 BHK flat, 8,000, there will be GST. 10,000 also, there will be GST. Maintenance charges collected, including property tax of 1,000 for a 3 BHK. Now, this property tax, they just collect from you and they pay it, so that is not included. So the value here is 7,000. And 10,000 minus 1,500, the value here is 8,500. So on this amount, there will be no GST. This one is exempt. This one will be subject to GST. This is taxable. Next, maintenance charges collected from each shop is 7,000 during the month. This is completely taxable for shops. This 7,500 is only for residences. Interest 7,000, 75,000. This one is exempt. So this is also exempt supply. On fixed deposit to the nationalized bank, because on interest there is no GST. 4 generators each costing 1 lakh were purchased. So this is a purchase. There is no supply here. So exempt supply looks like this. And pipes and fittings again were purchased. So basically this is 7,000 rupees, which is exempt. Into how many flats? 3 BHK flats are how many? 50 flats plus 50 flats, 100 flats. So 7,000 into 100, 7 lakh rupees is the exempt supply plus 75,000. The option should be 7 lakh 75,000. This is the right option. Second question. The amount of ITC the society can avail for the month of January is as under. As ITC on purchase, there are two purchases. One is generators, one is pipes. Pipes and sanitary fittings costing 25,000 are purchased for block A from a registered supplier and debit in the P&L account for block A. Block A is 3 BHK flats which are exempt, so on that you will not get any credit. But 4 generators of 1 lakh each were purchased from registered suppliers for power backup, out of which 2 were installed for 3 BHK block and 2 for 4 BHK. So 1 lakh, there are 4 of them, but 2 of them are for exempt supply, so no credit. The other 2, that is 2 lakh rupees, on that you will get GST credit. This is 99% each. So 9 lakh into 9% each. 2 lakh into 9% each, that is 18,000. This block, I'm not really sure. We'll have to confirm it because I think the answer is slightly different. 18,000. Yes, 18,000 CGST, 18,000 SGST. All right. I'm not sure if they say a block which is for taxable supply. Example, they say block is B and D, then you will get credit on that also. Then the answer will change. So we'll have to check it. This is not clear. I have a physical copy also. Let me check from that. Yes, pipes and fittings are for block A. This is block A. So you will not get credit. 18,000 is the right answer. We move ahead. The gross GST liability for the month of January is as under. How do we calculate the gross GST liability? ICNS. ICNS. Let's put the credit. 18,000 credit here, 18,000 credit here. Now the liability. They are charging 8,500 to 100 flats. That is 8,50,000 into 99% each. I hope I'm right. 8,500 into flats are 100. Yes, 8,50,000. That is 76,500, 76,500. I'm just writing it here. 76,500, 76,500. Next to the 20 shops also, they're charging 7,000 per month. So for the shops, it is completely taxable. 7,000 into 20 shops, 1,40,000 into 9%, that is 12,600, 12,600. That's it. These are the two amounts plus 76,500. So that is 89,100. 89,100. From that, this is the GST liability before reduction of ITC. So I don't have to reduce ITC. This is the answer, 89,100, 89,100 each. Next, question number 15. It's only for 1 mark. Let's see. Nilachal Chamber of Commerce, what a name, organized a business summit. Safal Private Limited, a registered manufacturer of ready-made garments, sponsored the summit. Now, who's the supplier? Who's the recipient? We don't know. How do we know this? Always the recipient is the one who pays. Example, if you go to McDonald's, buy a burger, are you the recipient? Yes, because you're paying. So here, who's paying? This Safal sponsored the summit and paid sponsorship fee. So I'm writing here, guys, this is Safal Private Limited and this is Nilachal Chamber of Commerce. Now, in this case, the fee amount is 1,50,000. As you know, if this is a company, it will be paid by them under RCM. So 1,50,000 is under RCM by Safal Private Limited. Next, Mr. Godbole, independent director of Safal Private Limited. Again, there is a director. And as you know, guys, any director, sitting fees, etc., other than salary, this is capacity director. He's being paid some services of 40 lakh. This is also under RCM. An independent director, so he does not get salary. This is other than salary. So on 1,90,000, it will be under RCM. We go to the next one. Mr. Anand, an unregistered person, rented his commercial building. Guys, if you're an unregistered person and you rent a commercial building, then it will be under RCM. to ABC Company, registered partnership firm under GST in the state of Tamil Nadu for the month of November. So this is basically under RCM. They are talking about time of supply. So if you remember, the time of supply for services is section 12. In that, RCM is section 12.3, and there are 4 dates. Recipient pays in 31 entirely, if you remember the shortcut. For those who don't know my lectures or don't know my shortcuts, I'll tell you. Between these 4 dates, we'll take whichever is earlier. First, date of receipt, but for services, we don't take race of receipt. Date of payment, and from the invoice, 61 days. So date of payment is here, the time of supply. The firm paid rent on 29 November. So date of payment is 29 November. And the invoice, whereas the invoice was issued by Anant in advance on 25th November. So the invoice was issued on 25th November, 61 days from 25th November. Let's see. So 25th November to 25th December is 30 days, and 25th Jan is 31 days. So 25th Jan, whichever is earlier, 29th November is earlier. If you don't have both these dates, then we will check the date of entry in the books of accounts of the recipient, because this is under RCM. So the answer is 25th January. That's it, guys. This is GST. So I believe the GST part I found was a little more difficult as compared to the DT part. But that's how life is. There's a balance. Here also there's a balance. DT has balanced out GST. Hopefully you understood the questions. If you have any doubts, I'm also going to put up the link for my WhatsApp channel and my WhatsApp dot solving group. I will keep releasing such videos. The next video I want to release are the amendments which are applicable for Jan 2026 exams. Watch out for those. Follow this channel, follow Yashas Academy, and let's do CA Inter Jan 26 really, really well. For those people who gave this exam, all the best. Tell me your scores, how much you scored, and don't worry. Sometimes the balance of life and the balance of tax paper will help you clear easily. All the best, and see you in the next lecture.